All right, so the spring housing season of 2023, definitely better than it's been, but not where we've seen springs last couple of years. There's signs that maybe there's a little bit of a stall out there right now. Can make it a very interesting rest of the year in 2023. This is Steve with the Malone Home Team with EXP here in the Atlanta area. So, what are we looking at? We saw a bunch of buyers come back in the spring. We got multiple offer situations. That's great. The interest rates were going down. The issue that we're seeing right now is the interest rates have kind of leveled, and they go back up, they go back down. We've talked about this in the last few videos. The fact that the interest rates, while they keep going down, they're not necessarily continuing to go down. They kind of bounce back up. They get close to 6 and they bounce back up. We're waiting for interest rates to get back into the 5s. That's going to really kick off a lot more buyers, kick off a stronger market. Not seeing that yet. Now that we are, we'll call it early to mid-May, we're seeing the market maybe slow down a little bit. So we're going to break down all the numbers right now, because when you look at the numbers, truth in the numbers coming out of April, and then we'll take a look at what's going to happen as we head towards the end of the year. So here we go. Let's break it all down. All right, so let's break down the numbers. I want to show you what's going on the good side, what's going on the kind of slowing side, and kind of give you an overview of exactly what's happening coming out of April. Now, we wait until May 9th because we're going to wait a couple days. We show all the numbers come in from April. All the numbers are in. I'm pretty confident that these are the numbers that we're going to be rolling with. When we look back at April, what's going on going into May, these are the numbers. So let's talk about the good news. First is, looking at average sales prices, since January 2020, you see the big upward trend. Obviously, we had the downward trend at the end of last year when everything slowed down. It bottomed out in January. The last 1, 2, 3 months in a row, we've seen home prices come up. That's the average sales price in Atlanta. Average sales price in Atlanta is around $496 right now. That's the highest since you go all the way back to July of last year. It was at $497. The peak was at $520. So we're pretty close to where the peak was last year. So we've really kind of rebounded nicely because of that. Another thing worth looking at is actually, let me move this real quick. Let's do this right here. Price per square foot. Price per square foot, same deal. Go all the way back to June. It's at $216 a square foot, all the way down to $196 per square foot. That was in January, but the last couple of months it has come up. Excuse me, each of the last 3 months. I'm dealing with a cold, and I'm sorry, there's no way I can edit it out. So we're just going to have to deal with it and pray that I feel better. So in April, we're up to $211. So 3 months in a row where prices have gone up. So things have definitely bounced back in the springtime. That $211 is pretty close to the $216 that we had back in June, which is where the peak was. So that's good news. The thing that we're watching, though, okay, and one more thing, shows per listing. This is the number of people looking at every single listing. We were looking last March, we had 17 people on average at every listing, and you saw everything cratered. The back half of last year to the point where every single listing, on average, at listings, we're getting 5 showings per listing. There's nobody looking at houses last year, at the end of last year. But things have improved January, February, March, April. So April's just barely better than March, but what it means is buyer traffic is back. People are back to looking at houses. Okay, looking at this, we're at 10.4. We were at 5.1, so we more than doubled the amount of buyer traffic that we have out there. So that's the good news. Now let's look at the not so good news, or the news that has us kind of scratching our heads. The number of new listings last month. And we're looking at this over the last 3 years. Let's look at it over the last 1 year, because I really wanted you to get the idea. Last year we saw a peak of homes being added to June. It was around 10,000 new listings in June. Then every month, even though we had such low buyers, low contracts, things like that, a lot of the sellers, what they said was they saw the writing on the wall, and they said, if we're going to sell our house and get top dollar for the house, this is not the market for it. So a lot of sellers just didn't put their house on the market last year. So you really only had, back in December, only 3,900 homes on the market were added in December. A very low number, one of the lowest numbers we've seen in a long time. It's come up, though, since then. March, we were at 7,100, but it's back down last month. 6,000 homes. Excuse me. So what does that mean? It means a lot of people they're not adding homes to the market right now. We're going to see what the numbers look like May into June, see if that continues. So Because of that, because the homes are being sold, homes for sale actually down a little bit to 8846. That's the lowest number of homes for sale in the metro since May of last year when things were super crazy. Number of pending sales, same deal. These are the people that went under contract last year or in the last month. 4,800. That's down from the 5,400 we had in March. March, it really looked like things were going getting back to business, but they're down a little bit to 4,867. Okay, so we've got all that to look at. The other one I want you to look at is months supply. We talk about this one all the time, and this one I want you to look at the last 5 years. Okay, first we'll look 1 year, then we'll look 5 years. A reminder what this is. Month supply is all the houses on the market right now. Let's say we don't add any more houses to the market. Okay, no houses at all. And what happens is we sell every house that's on the market at the pace that we're selling houses, right? So if we sell every house that's on the market at the pace that we're selling houses, how long will it take to get rid of all the houses? It's been at 1.8 the last couple months. Now, what does that mean? We say it all the time, 6 is technically a balanced market. Anything 5 to 7 is pretty balanced. 3 to 5 is a seller's market, but it's not crazy. 2 to 3 is a pretty strong seller's market. We're at 1.8. We've been at 1.8 for a few months in a row. We've been below 2. December was at 2, and we've been below 2 since. That means there's just no homes on the market. So even though we don't have a lot of homes, we don't have a lot of buyers, but because we don't have a lot of homes, that's what's keeping the prices up. There are a lot of places in the country where the buyers just went away and there were a lot of listings on the market. Anytime you have a situation where you have a whole lot of listings, not enough buyers, that's what's going to drive the prices down. That's what's going to drive your values down. Now, if you're in a situation where there's just no inventory and you have buyers, your supply problem is a bigger problem than a demand problem. Demand is good, supply is bad. That means your home prices are going to keep going up. Okay, so I think that the lull that we had last year is probably the biggest lull that we will see in this cycle. And if you wanted to really time it out and get a home in the best time period possible, you would have bought a home October, November of last year. Okay. That being said, doesn't mean it's a bad time to sell or buy a house now. I'm just saying, if you're looking for a dip, that may have been the closest to a dip that we're going to see here in the Atlanta area. Okay. Then I also want to show you percentage of original price. This is very interesting. Back in January, we're at 95%. That's what people were getting of the prices that they asked for. Now it's up to 98.1, which is pretty normal, actually. But you remember, way last year, people were getting 103% of their asking price. Okay, so that was coming back up. But the issue that we're going to have, and I want to show you that in these next couple graphics, mortgage rates are going to be the driving force of what's going on in this market. Okay, right now, this is from Keeping Current Matters, one of the sources that we use. So this is a Freddie Mac chart showing interest rates. This is since 2018, and you see this kind of dip, right? The dip was during the pandemic. We had interest rates. Here's your 3 line right here. We had interest rates at some points that were like below 3. Some people, I know, at like 2.5%, 2.75%. We're now at 6.32. You'll hear a lot of people say, historically, 6.32% rate, that's not bad. Which historically, that's true. It's really not bad. There have been some rates back in the 80s that were like well above 10 or maybe even 15. Okay. So yes, true. 6.32 is not too bad, except for the fact that we need people to sell their houses. At point blank, they got to sell their houses. We have no inventory. Okay. The problem is all those people who have houses are down here. They refied or they bought when the interest rates were 2.5. If you have a house and you were in it and the interest rates got to 2.5, you refied your house. Everybody and their mother. I know a lot of loan officers who paid off houses, paid for college, did whatever. And just these couple years, they didn't sleep, but they made bank because everybody and their mother's hairdresser was getting their loan redone. Okay, everybody's sitting on 2.5 to 3% loan. Okay, it is hard to get somebody to give that up to go to 6.32% loan. Now let's look at where are we forecast to go. Forecasted to go. This is quarter 2 or 6.1 by the end of quarter 2. maybe 5.7 by the end of Q3, 5.3 by the end of Q4, maybe down to 5.1 by the end of Q1 of next year. So what does that mean? We've seen a lot of reports saying that 5.5% is kind of the magic number. When we pass the 5.5% threshold, a lot of buyers are holding out for that. That's not to say that if it gets to 5.75, somebody's not going to jump. But I think 5.5 is really going to be that moment where a lot of people say, let's jump back in, Geronimo, back in the pool. Problem that we're dealing with, let's go back to this. This is the problem that we're dealing with. This is with okay buyer traffic, not crazy buyer traffic. Probably, I would say, when you look historically, take the pandemic out of it. You look historically, buyer traffic has been okay this spring. Not crazy, but not low. It's been okay. What's going to happen when interest rates get down to the fives and all of a sudden you double the number of buyers again? At one point, it's going to go to 0.9 unless the sellers turn around and sell their house. So we're hoping that the sellers are going to be ready to turn around and sell their house once we get into that situation. But that's what we're going to be watching as we head forward. The other thing I wanted to show you is, and this is just a complete aside, because I want to give you a little bit of context, okay? What does this map or this graph show? Percentage of distressed property sales. All right, this goes all the way back to 2012. 2012, 35% of sales in the United States of America were distressed. Foreclosures, short sales, 35%. That's more than 1 out of 3, okay? A whole lot. You see over the last several years, it's gone down, gone down. Then there's this kind of dotted line right here. It was around 4% just after the pandemic started, and then it went flat. There was a moratorium, okay? The government basically said you can't foreclose anybody. So there was basically a moratorium on foreclosures. We are out of that moratorium now, and this is where we are down here. You may hear a lot of news articles say the foreclosures are up 5 million% from where they were last year. They were up 5,000 trillion%. They might, whatever it is that they try to do to scare you to get you to watch the news. I want to show you that that's because there was nothing here. There was very, 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 very few foreclosures and short sales during that time period. Since then, they've gone up, obviously, but still, it is way down below that 4% threshold. Okay, like it's like 2%ish, 3%ish, something like that. Yes, they're happening, but they're not happening like they were. So this is not cause to panic. Everything's not crashing. If we get up to here again, obviously that is the sign of we're way underwater and things are going crazy. It's going to be a while before we get that. I say that to just give you an idea of that, number one. Number two, talk to a lot of people who say, we're looking for a foreclosure, we're looking for a short sale, we're looking for a distressed property to buy. And I show them this, and I say, not only are you looking for it, but every investor on God's green earth is looking for it as well. So you got a whole bunch more people now than ever were looking for it. Like back here, you really didn't have those flippers and whatever like you see on TV or see on YouTube and stuff like that now. This is kind of like the wild, wild west. Nobody knew what they were doing. Now we're out here. Everybody's got companies. Everybody's got plans. Everybody's got whatever, and they're ready to buy. And there's just nothing there. So I just want to give you that idea. So there's your update. The cool thing, at the end of the day, the whole time we were on the way down, I was cautiously optimistic, but in all honesty, I was not happy about where we were. That being said, this is a good trend. This is the trend I want you to focus on. If you're a homeowner, if you're a home buyer, homeowner, we were at 441 on the average sales price back in January. That was a drop from all the way up to 520. We had 1, 2, 3, 4, 5, kind of an even one, then 6. 6 out of 7 months went down. Okay, that's kind of rough. It was a very rough 6 months in real estate in the entire country. 1, 2, 3 very strong months up in real estate. When you look at the number of buyers that are in the market, even though it's not crazy, they're there. And you look at the number of homes on the market, which they're not there. There's very few. This number is going to keep going up. We are going to surpass this numbers later on this year. Okay, so we're going to undo all the issues that we had last year. We will be right out of that issue, back to regular real estate. Number one. So if you're a seller, relax. Home prices are ratcheting back up. Number two, If you're looking to buy a house, here's what I want you to do. I want you to just, okay, we're going right here. If you are buying a house, I want you to understand what this graph means. This is last year. 1, 2, 3. All 3 of those months, they went up 20,000, about 15,000, about 20,000. Okay? I want you to look at this month supply 1.8, 1.8, 1.8. Okay? I want you to see new listings low. You compare this with 5 years ago. Shoot, last year we had 10,000 listings. We're way down here at 6,000. That 3,930 we had in December, that's the lowest that we'd had since probably 2012-ish, okay? I say that to say there's nothing out there. There's nothing out there. Sales prices are going up. People are still out there buying. Home prices are going to do nothing other than go up. They're going to go up, okay? In Atlanta, home prices are going up. So if you're going to wait, you're going to wait to buy a house that's going to be more expensive this time next year. We're also going to be watching this. Interest rates are going to go down to 5.3 at the end of this year, 5.1 beginning of next year. That could be off. At some point, we're going to be back in the 5s. When that happens, the home prices will have gone up. The number of buyers going into the market will have gone up. And you're going to be going into situations where you're going to look at yourself in the mirror and say, man, I wish I'd bought a house last year because the prices have gone up and the number of buyers in the market have gone up. Where I could have just bought a house last year. Yeah, the interest rate was in the 6s. I could have bought it, got it at a lower price, not had a fist fight with everybody in the driveway, stuff like that, and I can refi if the interest rates get back down to the 5s or the 4s. Okay, so that's what, if you are buying in this market, that's what I want you to think. So there's your wrap on the numbers. So what do I think is going to happen going forward? All right, so there's your deep dive. We talked about kind of how the prices are coming up. Talked about how the interest rates are going to be going down. That's going to increase the number of buyers. Hopefully in time it's going to increase the number of sellers, but it's always a lag, okay? The buyers come back first. We saw at the beginning part of this year a bunch of buyers. Sellers saw, oh, the buyers are back, and the sellers decided, let's get into it. The buyers come back first. That's what's going to happen this fall and this spring once the interest rates start going down. And I'm going to reiterate one more time, just in case you didn't hear me, okay? If you're looking to buy, okay, my concern for you is that, because, again, I'm a real estate agent. Yes, I want you to buy a house, okay? But I want you to buy a house because it's a smart financial move to buy a house. It's a smart financial move, all other things being equal. If you're not sure about your work situation, if you're not sure if you're going to be here in a year, if you're not sure of all that stuff, if you're thinking, I'm going to buy, but I may have to sell in 6 months because I have to go somewhere, do not buy a house, okay? Don't do that. But if you're thinking to yourself, I'm planting roots here in North Georgia, I love it here because it's awesome in the Atlanta area, I'm not going anywhere. Me and my family are going to stay here, stay somewhere maybe 4 or 5 years, and then maybe go up in house, or maybe 4 or 5 years, and then the kids move out of the house, or in a downsize, whatever. But I want to drop roots, get some equity. This is it, okay? In a year, the home prices are going to be going up in the next year. There's no market forces whatsoever anywhere in the metro Atlanta area, in the economy, anywhere, that say that home prices are going down. There's none, okay? Number 2, the interest rates are going to eventually get below 6%. I would have thought it would have happened by now. It has not. Before I retire, in 30 years, the interest rates will get below 6%. Okay, I feel confident saying that, okay? That being said, it's probably going to happen sooner than that. It's probably going to happen sometime later this year into early next year. And when that happens, everybody's coming back, okay? We've had an increase in the number of buyers this year, but we're going to have an even bigger increase once we get interest rates into the 5s, okay? So if you're looking to buy, you buy cheaper right now and you have less competition. If you're looking to sell, there's really not a bad time to sell. I would say the 2 times you don't want to sell are anytime between mid-July through Labor Day, and then again, probably like early December through mid-January. Those 2 times, it's a very quiet market. Really great opportunities for you to get a deal if you're buying. If you're selling, lack of buyers, that's not a good time to sell. Outside of those times, it's a great time to sell because the buyers are out there and they're motivated, okay? And there's not a lot of competition. So whether you're on the buy side or the sell side, you have questions, I will hopefully have answers. Give me a call, 470-233-4409, 470-233-4409. This is Steve with the Malone Home Team, EXP in Atlanta. Take care. Bye.